profit that controls the ChatGPT creator. Bloomberg Intelligence senior technology analyst Mandeep Singh joins us now with the latest. And Mandeep, given that this offer has already been rejected by Sam Altman, does this mean that it's dead in the water, or could we see more developments around this option?
I mean, the first thing we have to ask ourselves is why was there an offer like this, which values OpenAI almost, one-third of what the private market valuation is. In fact, there were talks about latest funding round being at around $300 billion valuation for OpenAI. So I think this has to do with the fact that OpenAI is looking to convert their nonprofit structure to a profit entity, and they have valued their assets at around, 40 billion or so. And so what Elon Musk is doing is saying, hey, I'm willing to give you a much higher price for those nonprofit assets. And, if there is a bidder out there, then I can outbid them. But essentially, it's complicating the whole conversion of OpenAI's nonprofit structure to a profit entity.
Yeah, so Elon Musk fundamentally has a very different vision for what he thought, when he was there at the beginning for what OpenAI would look like. And I do wonder, is there anything in the kind of political element, right? Musk is obviously very close to Trump. We know that Sam Altman has also gotten close to Trump as well. Trump has backed Stargate. So do we see that influence coming into play at any point?
I mean, there is. And look, if there was a deal that was palatable to the OpenAI board, then clearly, Musk has the wherewithal to get it approved. But with that being said, when you think about the price tag here, and I know $97 billion is a big acquisition, but compare that to all the CapEx guidance that we have gotten from the hyperscalers. I mean, we are talking about 1 year of CapEx from Microsoft and Amazon. And so from that perspective, it's not a lot given how much these companies are spending in terms of developing AI.
And of course, this development of AI really has to do also with the geopolitical structure of the world right now, right? Take a listen to what the OpenAI Chief Global Affairs Officer had to tell us in a recent conversation.
There are two countries in the world that can build AI at scale, the US, the CCP-led China. Yeah. And what that really means is that there is a global competition right now between whether the world's going to be built on small d, democratic AI rails or authoritarian, autocratic AI rails. And that's the big takeaway from this.
Mandeep, how do you assess the latest views that perhaps the cheaper AI models being developed by China, including, of course, from DeepSeek, are really giving a run for its money when it comes to U.S. companies and the bigger, huge AI infrastructure projects like Stargate?
Yeah, you're right. And look, I mean, even though they talked about the $500 billion Stargate project announcement, with the DeepSeek moment, I mean, everyone is scrambling to figure out how do they bring the costs of AI down, and even, open sourcing some of their models, which is what DeepSeek has done. So clearly, whatever company is kind of focused on training their model has to think about an open source element to their strategy. And I think that's where everyone is headed in terms of these foundational model companies. And our view is you will see more consolidation now than you had previously in terms of the foundational model players, because one, you require high capex, and also you need to think about an open source strategy and lowering the cost of inferencing.
Bloomberg Intelligence Technology Senior Analyst Mandeep Singh there. Well, President Trump has followed through on his pledge to impose a 25% tariff on all steel and aluminium imports. For the latest is bringing our Chief North Asia correspondent Stephen Engels. So how sweeping are these tariffs likely to be?
Well, Donald Trump was pretty emphatic and definitive in his comments yesterday aboard Air Force One when he said he was going to be applying these 25% tariffs across the board on steel and aluminum imports to the United States. And he's come through on that pledge and essentially saying that this will apply to all steel and aluminum shipments into the United States, and there will not be any exemptions. There were exemptions the last time that Donald Trump imposed steel and aluminum aluminum tariffs in his first term. And this is effectively reviving and expanding the levies that he put in the first term, but not allowing those exemptions. Because if you remember, Canada, Mexico, and Brazil, three of the top exporters of those metals to the United States, won exemptions in the first time around. This time, Donald Trump says there will be no exemptions. However, in an impromptu press conference here in the Oval Office, he did mention that he spoke with the Australian Prime Minister Albanese and said that he would consider an exemption for Australia, perhaps only because the Australians have a trade deficit with the United States. Probably more on that a little bit later on. But again, this would take effect on March 4th, so 3 weeks to the day right now. And I guess that could leave some room for some negotiations. But so far, it's pretty definitive that Donald Trump is going to be putting those tariffs 25% across the board on all steel and aluminum imports to the United States.
So, Steve, we know that China is the world's biggest steel producer, but doesn't necessarily export a lot to the U.S. So how are we expecting these steel tariffs directly or indirectly to affect Beijing?
Yeah, it's an interesting question because China still does export those metals to the United States. The Biden administration, though, enhanced some of the steel and aluminum tariffs on China to 25%, I believe, just in September. So you're absolutely right. They're not one of the largest exporters, but China, you know, the argument from the White House is that countries like China and Russia are able to kind of circumvent some of the duties and trade restrictions using third-party countries to get its products into the United States or to sell to other markets, which in turn, like Canada, according to the White House, has been buying cheaper Chinese steel. As the Chinese economy has been slowing, it's been exporting more of its steel to places like Mexico and to Canada. And the White House claims Canada then ships some of its more expensive steel into the United States. So what the White House is saying it's going to be doing through these across-the-board tariffs of 25%, is going to be cutting off those, I guess you could call loopholes to prevent third-party countries from getting around those duties. A case in point would be a country like Vietnam, where the White House again alleges that China has been selling a lot of steel to Vietnam, which then takes it and finishes it, rebrands it as Vietnamese steel, and sells it into the United States. So this is the origin or the rationale behind a lot of these tariffs that could indirectly impact China as well as its economy slows and exports more of its steel.
Our Chief North Asia correspondent Stephen Angle there. Well, President Trump is also threatening to cut off foreign aid to Jordan and Egypt if they don't agree to take Palestinian refugees from Gaza. He's also told Israel to call off its ceasefire with Hamas unless all the hostages are freed by midday on Saturday. He's also spoken about not having a right of return for Palestinians to the Gaza Strip once it's rebuilt. Let's bring up Bloomberg News editor Michael Heath. So obviously a lot to unpack there, and there's been almost worldwide condemnation other than from Israel on some of the, if you want to call it plans or kind of just, spitballing ideas from President Trump. What are we seeing when it comes to the Arab nations?
Yeah, well, it's very difficult, Heidi, because as you say, they're completely opposed to it. But President Trump also said, specifically with Egypt and Jordan, that, if he had to, he might consider cutting off aid, which would be a disaster for them. These are economies and countries with young populations that are not particularly financially stable, and the idea that they'd lose US backing there, which is one of the key points to them being able to do business or attract investment, that sort of thing, is their relationship with the US. It could create all sorts of instability, and I think this is one thing perhaps that President Trump needs to get across, is that you sort of need to be careful what you wish for in the Middle East, because in putting pressure on states, you often find that what comes is someone will fall and someone worse comes as well. So he needs to be very cautious on that. But that sort of casts some doubt on their refusal, their outright refusal that they'll have anything to do with this. They need to be a bit more accommodative potentially. But it is also difficult to know whether he's trying to amp up pressure in general, or whether this is, he does intend to follow through on it. The issue with the hostages being returned, I mean, Hamas basically said that it was going to suspend the deal that it had with Israel in terms of returning hostages, that it softened that. And we've had, a degree of hubris from Prime Minister Netanyahu, who was talking about Palestinians being moved, people in Gaza being moved to Saudi Arabia, which sort of outraged everybody as well. So there's no goodwill really between Hamas and the Israeli government there. It's probably in Hamas's interest to keep this, and you wonder whether President Trump's talk about moving them is just a way of keeping, really keeping Hamas to go through with this deal. But even the propaganda efforts of Hamas in releasing these hostages, with these displays of armed fighters and that sort of thing, it's just designed to incite Israel as well. And of course, Palestinians obviously, after all their suffering, the goodwill there is nil, basically. So yeah, it's really unclear at present.
Mike, of course, the president right now also dealing with geopolitical pressure on multiple fronts. What are we expecting in terms of options to end the Ukraine-Russia war?
Yeah, look, I mean, it's the difficulty there, I guess. I mean, the Middle East is Trump is obviously a lot more active on because of the relationship with Prime Minister Netanyahu. There are talks. There seem to be talks going on with Moscow at this stage, and Ukraine has obviously said, obviously acknowledged that it's willing to do a deal on critical minerals with the US in terms of trying to sort of leverage some US support there. But sort of until we get the sit down with the two sides, we'll just have to sort of wait and see there. But Ukraine has certainly made clear that it's interested in a deal. It's willing to do it, and Russia has as well. And it's really just a matter of Trump's envoy there, who's sort of running the show. He's going to be in Ukraine, and sort of, I guess we'll just see from there how that goes. But the basic idea is Ukraine needs a security guarantee here so that Russia doesn't pause, rearm and come again. And Russia, to some extent, wants to keep hold of its gains. But yeah, I mean, we're just talking about some very, very complex, very, very fluid situations here.
Bloomberg News editor Michael Heath there. Would you have more ahead on the Asia trade? This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Take a look at what we're watching in Australia. We are seeing sort of broad upside when it comes to the ASX 200 industrial. Some of the miners are showing leadership today. We're also seeing that move when it comes to the Aussie yield curve as well, narrowly steepening, just tracking their global peers as well. We're seeing Aussie debt just falling at this point. We do have a couple of sort of eco data numbers to come through. Business confidence rising to 4 from that NAB survey for January. Conditions falling to 3. We also saw consumer sentiment they're looking pretty unchanged. So that sentiment recovery stalling on really the continued cost of living pressures and global uncertainty. And on that, the topic of global uncertainty, of course, we've been talking about President Trump ordering a 25% tariff on steel and aluminium imports. Let's bring in, for the views of sort of the broader business community, the ACCI CEO Andrew McKellar joins us now for more. Andrew, really great to have you with us. And so we have also seen the conversation that took place between Prime Minister Albanese and President Trump, the idea that perhaps we're seeing an exemption under consideration. How do you view the looming threat of trade tensions, of tariffs, and how that potentially continues to impact confidence, which, in a lot of business sectors is already fragile?
Well, hello, great to be with you. Look, it's a very important question, and obviously I think we, like everybody else, we're taking this one step at a time. Things are very fluid. We're seeing that there was a conversation earlier today between Prime Minister Albanese and President Trump. Things sounded hopeful coming out of that discussion. Of course, since then, we've heard that the President has signed the executive order and that there is an across-the-board tariff to be applied on aluminium and steel. So I think there's a degree of uncertainty about what the final detail will be. Obviously, from a business point of view, our preference is that we keep those markets as open and as free as possible. There's not necessarily huge direct trade for Australia in those items. We're exporting around $400 million Australian each in steel and in aluminium. So, look, there's a direct impact. The bigger issue is what happens in the supply chain. Obviously, there's uncertainty. I think at this point, let's see the dust settle. Let's see what the final detail is. We urge, I think, the US administration to proceed with caution, but we understand that, we're operating in an environment where things can change from minute to minute.
Right, and that sense that, businesses are to that extent really at the mercy of diplomacy and, what decisions are being made around across the other side of the world. But when it comes to what policies can do domestically, obviously we're just really kind of waiting for a date when it comes to the federal election, but we're headed to that vote. What would you like to see from the major parties when it comes to, what could be considered really compelling and transformative business-oriented policies?
Look, that's very important for business, and I think what our signal to the major parties in Australia, whoever will form the next government, we do want to see a level of ambition. We understand that there are fundamental challenges that the Australian economy has to address. Productivity is absolutely at the top of that agenda. We've made some progress on inflation. That's good. We've still got a very strong labour market. That's also very good. But if we're going to really have sustainable improvements in living standards, if we're going to get to the position where I think a lot of people aspire to be, then we've got to fundamentally, address productivity. Part of that is getting the budget in order federally. We're heading back into structural deficit to be competitive. We need to look at things like tax reform. It's been a quarter of a century since anyone seriously attempted tax reform in Australia. We're talking about what President Trump is doing on tariffs now, but the next thing that he could do could be on company tax in the US. That's somewhere on his agenda. In Australia, we need to be competitive in that space again if we're going to attract investment. So those are the fundamental priorities. The other issue, if I can say, in Australia, which we're really struggling with at the moment, and that's the impact of compliance, red tape, regulation, that's having a huge impact on many businesses. Whether it's red tape or green tape, we're really seeing across small business and large business that's a bigger issue than it's ever been before.
Andrew, how about the impact of the rate environment? Is there anything that businesses in Australia want to see from the Reserve Bank of Australia? We have that decision next week.
Well, it will be a critical moment. And from a small business view in particular, obviously, the sooner we can get to the position where the Reserve Bank is confident to start cutting interest rates again, then the better it will be. Will that be next week? Honestly, we don't know. It's very hard to say whether or not they are prepared to give full credit for the reductions that we've seen in inflation to date. On a superficial reading, that core inflation measurement is still just a little bit above their target band. It's heading in the right direction. A lot of progress has been made, but are they ready to make that cut? Obviously, from a business point of view, the sooner that can happen, then the better it will be.
The Australian economy, of course, is heavily intertwined with how China does as well. We have seen the trade wars starting to ignite, especially with more back and forth between the U.S. and China. How important is it for Australia to stay out of that? We have seen, of course, the latest problems between China and Australia as well during the first Trump administration.
Well, I think the good thing in terms of our trading relationship with China is that we've made significant progress in the past 1 to 2 years, where we've seen a range of the direct trade measures that they were applying to Australia have been lifted step by step. So that's been, I think, a positive direction in helping to restore some confidence in the direction of that relationship. But China is our largest bilateral trading partner. That's not going to change. There's been a lot of talk about diversification into different markets, into India and into the Middle East, with the US itself. Of course, if we get into a situation where the rules-based order is really going out the window, and we end up with a much more confrontational trade environment, well, that's not going to be good for anybody. Australia is at risk in those circumstances as a sort of a medium-sized open economy reliant very much on our trade partnerships. So obviously, we've got a lot invested in that, and those relationships are important. We don't want to be collateral damage, in a big fight between the global giants in the trade world.
Andrew McCullough, CEO of Australian Chamber of Commerce and Industry there. And do stay tuned for another big interview out of Australia later.